Most of us think our car insurance has us completely covered. But what if there's a gap in that protection? A gap that's actually big enough to put your entire financial future at risk. Today, we're going to dig into why 250/500 liability is really becoming the new essential standard for keeping your family secure.
So let me just ask you this straight up. It's a simple question, right? But the answer is so important. It's not really about if you have insurance, it's about if the insurance you pay for is actually enough to shield everything you've worked for when things get really serious.
And this brings us to something that's often called the coverage gap. It's a really common and, frankly, a pretty dangerous blind spot in our personal finances.
We all say this, don't we? Oh, I have insurance, I'm covered. It feels good to say, it gives you this sense of security. But that security can often be, well, a little bit of an illusion. Let's break down why.
Okay, so here's that gap in action. On the left, you've got that feeling of perceived safety, that comfort of just having a policy. But on the right, that's the reality of your actual financial exposure. Just having a policy, especially if it's just the state minimum, doesn't mean your house, your savings, your assets are actually safe from a major lawsuit. So what happens when that gap becomes a real problem? Let's talk about the real-world consequences when your insurance policy hits its limit and just stops. A serious car accident these days is just unbelievably expensive. We're not talking about a little fender bender here. I mean, think about all the costs that just start piling up. Ambulance rides, surgeries, long-term physical therapy, not to mention months of lost income for whoever was injured, replacing vehicles. It all adds up to a staggering amount fast. And what do those costs actually look like in dollars? Well, it is not at all unusual for a single injury claim to blow past $250,000. Now, just imagine what happens if multiple people are seriously hurt. Those numbers don't just add up, they skyrocket. And this is the part you really need to hear. When your insurance money runs out, you are personally on the hook for every penny that's left. And this isn't some scare tactic, it's just how liability law works. It can lead to your wages being garnished, a lien being put on your house. You could be forced to liquidate your savings, even your retirement accounts. Your entire financial future hangs in the balance. It's exactly because of this risk that a new standard has really emerged for protecting what you've built. So let's talk about 250/500 liability coverage. The numbers sound like insurance jargon, but it's actually super simple. The 250 just means your policy will pay up to $250,000 for bodily injury for any single person in an accident that you cause. The 500 means it'll pay a total maximum of $500,000 for everyone's injuries in that same accident, no matter how many people were involved. So let's look at a quick comparison here. A lot of people have what's called a 100/300 policy. It's pretty common. But jumping to 250/500 more than doubles your per-person protection and gives a huge boost to the total accident limit. I mean, that is a massive upgrade to your financial shield. Look, at the end of the day, this isn't about being an alarmist. It's about being smart and building a strong financial buffer. It's literally the difference between saying, "Phew, the insurance company handled it," and having to say, "That lawsuit, it changed our lives forever." Now, let's throw another factor into the mix, one that dramatically increases the risk for a whole lot of families out there: the new teen driver. The day your teenager gets their driver's license, your family's financial risk profile just completely changes. I mean, overnight. And it's not because they're bad kids, of course not. It's just because they're inexperienced. Statistically, they are far more likely to be involved in an accident. And trust me, the insurance companies know this and price for that risk. And here's the bottom line. As the parent, as the policyholder, you are financially on the hook for whatever happens. An accident that your teen causes could have absolutely devastating consequences for you. Adding a teen to your policy is probably the single most important moment to sit down, review, and seriously increase your liability limits. Okay, so having the right amount of auto liability does something else too. It's the key that unlocks the next level of financial protection. So here's something that a lot of people just don't realize. If you want to get a personal umbrella policy, the thing that adds another $1 million or more in liability coverage, most insurance companies won't even sell you one unless you first have underlying auto limits of at least $250,500. Without it, that incredible extra layer of protection isn't even on the table. So what does an umbrella policy actually do? What does it protect? Well, it's a shield for all your biggest assets. We're talking about your home equity, your savings, your retirement accounts, and yes, even your future income. It is designed for one specific reason, to protect you from that catastrophic, life-altering lawsuit. Okay, let's kind of reframe this whole conversation. This isn't just an insurance decision you make once and forget about. It's a core financial decision. It's about managing your risk. I know what a lot of people are probably thinking. Okay, this sounds great, but it must be incredibly expensive to upgrade from, say, 100-300 to 250-500. The truth is, you'd be surprised. The actual increase in your premium is often really small. Frequently, it's less than what you'd spend on a single dinner out for the family each month. And when you actually weigh the costs, the choice becomes pretty clear, right? On one side, you have this tiny, manageable monthly cost to seriously upgrade your protection. And on the other side, you have the potentially catastrophic, life-destroying cost of a major liability judgment against you.
Here's another great way to think about it. State minimum coverage, that really just protects your license, your legal ability to be on the road. Moderate limits? Yeah, that might protect your car. But higher liability limits, that's what protects your future. It's all about making sure your coverage matches what you truly have at stake in your life.
And I have to leave you with this one last, pretty sobering truth. Insurance is a proactive decision. Once an accident happens, it's too late. You can't call your agent from the side of the road and ask to bump up your coverage. You are locked in with the choice you made before you got in the car. So I'll just leave you with this one question to think about. I want you to look at the home you've bought, the savings you've worked so hard to build, the family you're raising. Does the liability protection you have on your auto policy, does it truly match the life you've built?